What's up, everybody, and welcome to a brand new episode here at Hack Your Finances. Just this last week, there was breaking news that Tesla stock is going to be joining the S&P 500. So today, we're going to break down what that means for the S&P 500, what that means for Tesla stock, if you should buy it, or if you should wait till the market drops. Let's go. So before we dive into Tesla stock, I think it's important to ask the question, what is the S&P 500 and how does it work? So for starters, the S&P 500 is an index fund that's made up of some of the top and biggest 500 companies in the United States. So that means this index fund is comprised of 500 different types of stock in different companies ranging from Facebook, Netflix, Google, Amazon, Berkshire Hathaway, and everything in between. Now, what's interesting about the S&P 500 is it's a market cap weighted index. What does that even mean? Well, don't worry, we'll break it down. The market cap is basically saying it's utilizing the market capitalization of each individual stock. And that is ultimately the total value of the stock of that company. So some companies are worth billions, millions, trillions of dollars that are all comprised into the S&P 500. Now, when it says it's a weighted index, it means that it's weighting the index, the fund, based on the size or the amount, the cap size of each individual share. Now, a great example of this is making a smoothie. Imagine we put an entire pineapple in, then we put in a banana, and then we put in one strawberry. And after you blend it up and you go to taste it, what are you gonna taste the most of? Pineapple, because it's bigger. And that's how it works with a market cap weighted index. And that's why for me, I love the S&P 500 as an investment vehicle. Number one, it's super diverse. So you have over 500 different companies that are in different sectors and different areas, from software to technology to basic goods and services to everything in between. And so no matter what area you're looking at, you're probably gonna have a piece of exposure in it when you're working with the S&P 500. And not only is the S&P 500 diverse, but it's also based on size, because size matters when it comes to your investments. So the S&P functions in the fact that it's a market cap weighted index. So the larger companies are going to impact the price and its movement more than the smaller companies. And this is something that's actually really powerful when you think about the fact that your bigger stocks are going to continue to get bigger and bigger, and some of your smaller ones that aren't doing as well are going to stay smaller and have a less of an impact when they move. And so now that we have a basic understanding of the S&P 500, what it's comprised of, how it operates, how it works, let's dive into Tesla stock. And recently, the S&P made an announcement that on December 21st, Tesla is going to be joining the S&P 500. And this is a really big deal because Tesla is going to be the largest company that has ever joined the S&P 500. And the reason why this matters is because the bigger the company, the greater the impact it has on the S&P 500. At the beginning of 2020, Tesla had a market cap of $80 billion. And at the time of this video, it now has a market cap of over $460 billion. And I think what's really interesting is because of how big Tesla is, one thing to note is that it's going to impact the S&P 500 and is part of one of the top players in terms of movement. What's crazy is the top 10 companies within the S&P 500 make up over 20% of the total holdings. So 10 companies impact it by 20% out of 500. And Tesla is going to be a part of that group. But to be honest, when I think about the S&P 500, how long it's been around, how it's had companies come and go, it joins, it leaves, that we've seen just a consistent trajectory and rate of return when it comes to the S&P 500. So to be honest, when I think about Tesla being part of the group, it really doesn't impact my perspective whatsoever. Because I'm thinking long term, I'm thinking about all of the companies that are comprised within it, and ultimately thinking about the consistency on the returns and saying, hey, this is still a good long-term play. Then bodes the question, what's the impact on Tesla as it joins the S&P 500? And so when we think about the S&P 500, we have to recognize that these are actual holdings. It's an index fund of actual stock. So we have to understand that as companies are entering into the S&P 500, it actually means that there's going to be shares that have to be acquired to be properly weighted inside the index. Now, this has some larger ramifications when we think about Tesla its size and how much needs to get added into it. And so when we really look at the raw numbers, there's over $11 trillion tied and attached to the S&P 500. But not only that, there's multiple funds and additional indexes that also link to the S&P 500, which means that there's not only dollars being sent to that, but there's also Tesla stocks and shares being sent to other holdings that are attached to the S&P 500. So what does that mean in layman's terms and actually the bottom line? It means that there's going to be a large number of shares that are going to need to be purchased by fund managers and by the S&P 500 to be properly weighted based on this new entry of Tesla in the S&P 500. And so what does this mean for Tesla stock? Well, let's go back to economics class. Supply and demand helps drive price. And so realistically, I think we're going to continue to see an uptick in Tesla stock prices, and especially as we get closer to December 20th. Now, I will put in the disclaimer, I'm not an investing professional or advisor. I'm not here to tell you what you should do or what you shouldn't do. This is purely here for entertainment purposes only. So with this increased demand, it bodes the question, should we just scoop up Tesla stock and buy it now? And my recommendation to you for entertainment purposes only would honestly be to ask yourself the question, what is your investing practices? And so should you buy Tesla stock before it joins the S&P 500? Should you wait? Ultimately, it boils down to your investment strategy in navigating the long-term game plan that you have in place. And so we shouldn't be investing in stock just because of news that's coming out, whether it's because there's going to be a share split or whether there's breaking news that it's coming out and joining the S&P 500. We should be investing based on good investing principles, based on research, looking at the company and looking at the long-term growth that we think the company has out in front of it. Remember, it's called investing, not betting. So make sure you're making a wise decision in your investments, no matter which side of the fence you fall on. And so if you want my opinion for entertainment value only, honestly, I think your best play is to continue to invest in the S&P 500 over time, making small additions to your investment portfolio. Well, hey, I hope you enjoyed today's video. Make sure if you haven't, hit the subscribe button, hit subscribe and the notification bell, and help spread the word as we hack your finances. Thanks for tuning in. We'll see you next time. Peace.